Evening, everyone. Here in Brazil. Good morning to Australia and China. Today we are starting our webinar from the part two for talking about foreign investments in land. And today here, my name is Ollavo Tinoco. I'm agronomic engineer and 2019 Nuffield International Scholar. Joining us for speaking, we have Julio Toledo Piza. He's also an agronomic engineer with an MBA from the Columbia University and an agribusiness consultant. And from Australia, we have Richard Heath. He is the director executive from the Farm Institution, Australian Farm Institute, and also the director from the Grains Research and Development Corporation. And from China, we have Paul Niven. He's a vet with the MBA from the Australian New Zealand College of Veterinary Sciences, and a general manager from the Pure Source Dairy Farms, a joint venture from Fonterra and Abbott, located in China. So for starts, I would like to give the word to Julio to explain him a little bit about his background and his opinion about foreign land investments. Good night.
Good night. Thanks, Ollavo. Hi, everyone. It's a pleasure to be here. Thanks, Nuffield, for putting this together. It's always a good thing to be able to discuss such a passionate topic as this one. I'm an agricultural engineer, as Ollavo mentioned. I also have an MBA from Columbia University. And for many years, 8 years, I was a CEO of one of the largest Brazilian agricultural companies. It's a company called Brasilagro. It's a listed company, it's a publicly traded company, both in Brazil and US, São Paulo and New York. And over the years, as CEO of this company, I've managed to buy roughly 350,000 hectares of farms throughout South America, Brazil and Paraguay, sold a bunch of them as well, developed a bunch of them, focusing on corn and soybeans and sugarcane, on cattle, so a bunch of sugar canes, a bunch of different crops. So that's my experience. Since I left the company some 3-4 years ago, I continue to be a farmer myself, and I also sit on the board of several agricultural companies in Brazil, both on sugarcane related and corn and soybean and cotton. So I have very long experience with that. And this is a very sensitive topic you are proposing us to discuss. And I think it is sensitive because on many countries, the whole discussion about being a farmer and producing food has become much more of a social issue than an economic issue. So in several countries, the government thinks and treats the sector as of social importance and not an economic activity, and therefore creating several rules on how that would work. So several layers of subsidies. Therefore, it has on many developed countries, especially Europe and US, farming has not become a regular economic activity. It's been super regulated, and there's a lot of care on how these countries go about it, being because they think it's a strategic issue, food security, or because they want to keep people living on the countryside, not moving to the cities. So for a bunch of different world, and I'm talking about Australia, I'm not talking about Brazil or Argentina, I'm talking about Europe and US, basically, have treated agriculture differently. And that has led to a different way of treating this. And it's interesting because Brazil has taken a different path in the early 90s with a very important regulation of the sector. So everything that was controlled by the government, such as exports and price setting, was eliminated back then. And everyone was betting that Brazil would suffer significantly from that deregulation. And actually the opposite happened. Brazil has become a major player in the sector, one of the major exporters on all the big commodities that we have out there. So Brazil has had a great experience in transforming. And I would say that alongside with Australia and probably Argentina, those are the three countries that actually you have a highly organized, large corporations, large companies being in the farming business, probably the most advanced ones in the world. And I guess, in my opinion, is just because of the regulation that took place in the early 90s. Brazil was able to actually develop quite nicely, and that led to the creation of several companies. So I would say that the average farm in Brazil is pretty large, and you have at least today 3 listed companies, and I would say that we could have another 10 of large agricultural companies in Brazil. And I'm just talking about soybeans and cotton and corn. If I went to sugarcane, we have another 3 or 4, and we could have at least 20 or 25 companies in the farming sector that could be listed, which is something that you wouldn't find in any other place in the world. So Brazil has had a great experience in that. And it was pretty much deregulated, including acquisition of farms for foreign capital, until 2010, when the Lula government sort of like resurrected from the dead an old piece of legislation and create a bit of a mess, a legal mess, but made it a very complex and not 100% legally secure for foreign individuals to buy land, and that happened in 2010. But before that, it was pretty much okay. And the main argument used by the government back then was that it would be a bad strategic move for the country to have foreigners owning land, which I don't quite get at the point, especially in Brazil, in which you have, for instance, the company I was CEO, which is a publicly traded company. Therefore, anyone can be a shareholder of it. Anyone could be getting the economic results of being a farmer, of being a landowner. So it doesn't make much sense. It seems to me that people are very afraid that foreigners would control the country, and the military also very sensitive to this topic. But everything for me is rooted on the main cause of agriculture as a business being a new thing. And I think as we evolve and that's become more of an asset class, and more people are investing and become more important as an activity in the economic sector, things tend to get deregulated in that sense. So Brazil has had these experiences back then, super deregulated, grew a lot, and the last few years it's got a little bumpy on that side. But I think things will improve. There's several pieces of legislation being discussed to change that and create the legal framework for this to happen. But nevertheless, if you're a foreigner and if you want to invest in land in Brazil, there are ways. You can either become a shareholder of one of the publicly traded companies, or you can arrange with a private equity firm a legal framework that would still work. It's not as simple, but it could be accomplished. But nevertheless, I think the important thing would be for countries in general to start treating agriculture as a business much more than they have done so. So that's my initial remarks. And then we can move from there on the Q&A. Thanks, Ollavo.
Thanks, Julio. It's quite amazing how Brazil sometimes holds on its own growth about the economic development, but it shows us how the clarity and the clearness of the professional regulated market can improve the growth. So Richard, could you explain us a little bit how works Australia and how the investment from foreigners in land can work in your country? Good morning, sorry.
Thanks, Ollavo, and yeah, good morning here, good evening to you in Brazil, and thanks for the opportunity to talk a little bit about foreign investment in agriculture in Australia. Just very briefly, a little bit about the Australian Farm Institute. We're an agricultural policy research organisation. We're quite a small team, independent, and our mission is basically just to produce the evidence base and thought leadership around all sorts of agricultural policy issues in Australia. And so foreign investment in agricultural land is an area that we've paid pretty close attention to as Julio pointed out, a sensitive issue, a sensitive political issue. I think it is all around the world, and it's, you know, it is the same here in Australia, and there has been quite a bit of policy focus on it over time. So what I was going to do is just talk briefly about the process for investing in farmland in Australia, and then a little bit about how much foreign investment there is here. A little bit about the prices for farmland and the trends around those prices. And then I'll just finish with a bit about the performance of agricultural farmland and how well the investments have been doing. So if you want to invest in agricultural land or agribusiness, so processing businesses, you know, secondary business, post-farm gate business in Australia, generally that investment has to be cleared by the Foreign Investment Review Board, which is a government organisation that assesses all foreign investment proposals and makes recommendations on whether they are in the national interest or not. Now, there is a trigger, so there are exemptions that you don't have to go through the Foreign Investment Review Board if the investment is in farmland is under $15 million, or if it's an agribusiness, if it's under $60 million. Normally that threshold applies. However, at the moment, because of COVID, they've reduced that threshold to 0 across the board. So any investment, no matter how big, has to go through the Foreign Investment Review Board. And also, if there's any government involvement or government investment, then it always has to go through the Foreign Investment Review Board, no matter what size the investment as well. So I personally have some direct experience in this. We sold a farm quite a few years ago now that was below the trigger to go to the Foreign Investment Review Board, but because it was a pension fund that bought the farm that had actually some Swiss sovereign money in it, it had to go through the FIRB process for approval. Now, just interestingly as well, in terms of other exemptions, countries that have free trade agreements with Australia sometimes also have different limits as well. So, for instance, New Zealand, Chile, and the United States, the normal threshold, so pre-COVID restrictions, the normal threshold that applies to them to trigger the FIRB process is actually $1.2 billion. So there's quite a huge difference between 15 million and 1.2 billion as a result of being part of that free trade agreement. The part of the process that you have to clear to be approved by the Foreign Investment Review Board, and this is a recent addition to the legislation, and really brought in because of these social pressures and these, the political sensitivities around this more than anything else, is that you have to show that there's been a clear and transparent process in the sale of the property. So that means that it has to have been publicly advertised for at least 30 days in the 6 months before the sale. So you can't, as a foreign investor, go and privately negotiate a sale and make that purchase without that sale, without the opportunity for Australians to participate in the process and make equal bids. That's been one of the most significant changes in recent years to the process that you have to go through. But if you do all of that, then it gets to this much more opaque process and hard to define process about whether the sale is in the national interest. there are no rules around what the national interest is. It is just assessed on a case-by-case basis. There's some guidelines, and they address things like preserving national security, preserving government revenue, evidence that the buyer will respect Australian laws, consistency with government policies, and then really vague concepts like the character of the investor. And so that test of national interest allows a lot of political latitude if something becomes unpopular and becomes part of a media process in terms of the sale, then there's a lot of latitude there for the treasurer to say that the sale shouldn't go ahead. And that has happened on a couple of very large, significant sales of iconic properties in Australia that have become, attracted a lot of media attention, and that sale has been turned down. But generally, that's not the case. Generally, there is quite a fluid market in foreign investment in ag land in Australia. And we know this now because if you do purchase land as a foreigner, there is a requirement that you inform the foreign land register that we have in Australia. So all foreign owned farms are included in the register of foreign owned assets. And what that shows is that while there are lots of transactions going on, the total amount of ag land that is owned in Australia has been very stable. So foreign interests are selling farms just as quickly as they're buying them. And the total percentage of Australian land that is owned by foreign interests has stayed very stable at around 13.8% of all Australian ag land has some level of foreign interest. And that's about 52 million hectares. 83% of that foreign ownership is leasehold land, and that is due to most of the extensive grazing country in particular across the top of Australia. The land tenure mechanism across there are 99-year leases or even longer leases, that there's not actually the capacity to buy freehold land across most of Northern Australia. So 85% of the land that's owned by foreign interests is for livestock. So most of it is a crop across the top of Australia in those really broad, extensive properties. Now that certainly doesn't mean that that's the equivalent value of agriculture and ag land, because a lot of that, it might be millions of hectares in those big extensive outback stations that is not worth nearly as much as a few thousand hectares in a very, very productive irrigation cropping area, for instance. In terms of who owns the land, China and UK are equal top investors, and they each have about 2.4% of Australian ag land. The Netherlands has 0.7% and the US has 0.6%. So what do you have to pay to buy ag land in Australia? Now, obviously, there's a huge difference in prices from, 100, in the hundreds of dollars a hectare or even less, tens of dollars a hectare for that very extensive country through the outback, to many, many thousands of dollars a hectare for intensive irrigated area in more favourable parts of Australia. But looking at the averages and the trends in prices over the years, in 2019, the average price per hectare across all farmland in Australia was just over $5,000, nearly $5,300 a hectare. That had increased by 13.5% from the previous year and was the 6th year in a row of growth in land prices. And that added to contributed to a 20-year annual growth rate, average growth rate of 7.5%. Now, generally, also contributing to that, the number of farmland transactions has been declining for some time as farms become larger and more aggregated, and the opportunity for sales becomes less. But there's still plenty of interest and competition. So the increased competition for fewer parcels is one of the reasons that's contributing to that very steady and continued increase in farmland price. So finally, the performance, which is obviously another reason why we're seeing that continued interest in foreign investment in Australian ag land, has been really good. There is an Australian farmland index, which is constructed in the same way and uses the same methodology as the NCREEF index that I'm sure some of you might be aware of in the US. And that shows that since that index was established in Australia, it's only been going since 2015, the average annualized return has been 14%, so 13.94%, just under 14%. And that's been pretty evenly split between income and appreciation on assets, with income being about 6.5% and land appreciation being just over 7%. And that compares with, using exactly the same methodology, about a 10% total return in US farmland. So that sort of, I think, and the farms that are included in this index are those large corporate farms that are typically attracting foreign investment. And there's quite a large percentage of permanent cropping in those farms that are included in the in that index as well. So, I think that's one of the main reasons we're seeing such interest, is that good return, and particularly that quite strong return compared to comparable agricultural assets globally. So I'll leave it there. Hopefully that's given you a flavour of what the investment environment is like in Australia and some of the facts and figures, and looking forward to a discussion.
Thank you very much, Richard. It's amazing how you brought a lot of good numbers and a lot of things that are clear and from a long-term development of legislations and programs for investment in land. So, Paul, you're without video, but we can hear you clearly. So could you speak from us and tell us a little bit about your background and how is your work in China with the dairy sector? Good morning.
Very good. Look, firstly, thank you to everybody for inviting me along. Hopefully I can give you a small insight into another part of the world. And I definitely think that where China sits is at the other end of the spectrum compared with what Julio described in terms of land use. So my role is that I'm the general manager of a integrated dairy business in basically the middle of China. It's near a place called Jinan, Jinan. That's the capital of Shandong. Most people haven't heard of it. It's got 10 million people in a province with 100 million people. So it's actually the outside Beijing, Shanghai, Guangzhou. It's actually the province with the highest GDP in China of about $10,000 per person. So from a Chinese perspective, it's quite prosperous. And we're about 50 kilometers to the west of Jinan. And we are very close to the Yellow River, which is one of the major rivers in China. So I've been in China since 2015. And during that time, I've been involved in the site selection, design, build, and now operation of 2 large-scale dairy farms. So my sharing for you today really starts with, when you arrive in a new country, forget everything you know about everything. Forget about the understanding of how land works, understand labor law, understand everything, and you almost need to build it up again. And what inherently happens is that we come with our own biases, we have our own experiences, and therefore we need to respond accordingly and manage ourselves to be able to understand what happens. So what I want to look at now is what actually happens in China. So just by way of introduction, China has been occupied and farmed, literally farmed much of its land for over 4,000 years. Since the foundation of the People's Republic of China in 1949, land itself is managed by the lowest level of government, which is a village. And a village is about 200 families, about 500 to 1,000 people. And around that village, they've probably got what is called in China, it's a mu, M-U, and a mu is 666 square meters. So to just put that into perspective, 15 mu is 1 hectare. So it's 15 to 1 to convert mu into hectares. So these villages have got about 2,500 mu, and the village, the head of the village, the government head, allocates that land to families. So if a family's got 2 sons, they might give them a certain amount of land. If a family has 1 daughter, they might not give them any land. And there's always a trade-off between the good land in the village and the bad land in the village. So somebody might get 2 mu of good land and somebody else might get 5 mu of bad land. And basically the purpose of land is to generate an income. And still China is full of peasant farmers. And if you were to walk around most of China at any particular time, you will see old men and women tending their crops basically by hand with limited machinery, very small tractors that you don't even sell in Australia anymore, you know, like 5 horsepower, 20 horsepower tractors, and with little pieces of implements that are like 3 meters wide. So that is peasant farming in China. So the comments that I make today are really in relation to Middle China. And when I talk about Middle China, I refer to the area that is basically north of Shanghai and south of Beijing. And I do not have experience in southern China where they grow rice and have elevated farming. And I have no experience in what's called the Northeast, Dongbei, which is the area up between North Korea, Russia, and Mongolia, or also the area far west that takes you into Kazakhstan and those areas. In the northeast and the west, they are very large acquisitions or large pieces of land. So my comments don't apply to there. But in Middle China, as I said, these farmers usually are governed by the government or their local village committee. They all have a couple of mu. And where we are, we can grow, we have about, and most of Middle China is like this. It is summer-dominated rainfall. It has about 600 mils or 500 to 600 millimeters of rain that falls in June, July, and August, which is great for growing corn. And everything else is fed by underground water. And water, I'm surprised the guys haven't talked about water. Not that there's, not that I'm trying to be critical of their conversation, but for me, the value of land is closely tied to what you can grow on it, which is really a reflection of what water is available. So what we have done is we have negotiated with multiple villages. In fact, we've negotiated with about 25 different villages. And to get land, you don't own land, you pay a yearly rent, or in some places you pay multiple years of rent in advance to that village committee, who then reallocates that money out to their people. And basically, renting land in China is an alleviation of poverty. So what it does do is it guarantees income for these people, and it's a very important understanding of how land is used. Land has no rights. So you cannot use it as an asset. You cannot use it to borrow against. You can just use it for its purpose. And realistically in China, there are three main types of land. There is basic agricultural land, where you can just grow crops and you are not allowed to build anything on that land. There is general agricultural land, where you are allowed to build buildings for animals, which we have. And we have 30-year leases on our land. And then you can also grow, you can put greenhouses of any type of construction and various other types of plant or animal operations. And then there is construction land. And construction land is for either human dwellings, for industry, for retail, that sort of thing. So the way the government manages this is that there are quotas or maximums amount of construction land and general agricultural land, so that there is kept a base level, which in most places is about 90% to 92% of the county, which is a couple of levels up, of land that must be held as basic agricultural land. So that's the way the government regulates it. And the whole concept of land right use is very difficult to acquire. So when we started this work, what we were doing was, we had two purposes. The first purpose was to have land onto which to spread our treated wastewater and solids from our dairy farms. And the second purpose was so that we were self-sufficient in corn production for our dairy farms. So that's what we set out to do, and that's what we achieved. And we have rented 30,000 mu, which is 2,000 hectares, about 1,000 around each of our farms. And as I said, that has come from 25 different villages. And that means that we literally have a library of agreements where every villager in that village has put a thumbprint to agree that their land has been signed over to the government. And then the government almost acts like a land broker who then trades that land with us. And that's who we ultimately have our agreement with. So that's just a very small introduction. But as I said, whenever you either go into a different country or a different geography or region, even as Richard described, there are differences between New South Wales, Queensland, Northern Territory, and like Richard, I'm from New South Wales. I never knew that there was 99-year leases on land. I thought in Australia you just bought land. And then you move to China and you're just the renter of the land this year, or the user of the land this year. So it's a very different concept, but I just hope I've been able to just give you a little bit of an insight into the world of land and China. Thank you.
Well, thank you very much, Paul. It was amazing because I never heard about most of your talking, and your great point is to forget about everything that you know when you join a new country. So before we open to the public, I would like to getting this hook from Paul and ask Julio about how was when he started his operation in Paraguay, and also to ask Julio to ask a question for Richard or Paul, so we can do a small interaction between us. Then we will open to the public.
Thanks, Ollavo, and congrats to Richard and Paul. Very, very interesting points you've brought to the table. And I guess, Paul, you were totally right about clearing your mind and trying to come up with a blank slate when you go to a different place. And that's what happened to us when we went to Paraguay, which is a neighboring country to Brazil. And we were there. And I remember the first time I was discussing with investors or analysts in the market, saying that we wanted to buy farms in Paraguay. People would look at us and, are you crazy? We're going to Paraguay. I mean, nothing good can come out of it. And I'm looking backwards, and probably is one of the best investments we made in the firm back then. Great returns. It's a totally different region. You don't know how you're going to grow stuff, the logistics are going to work. You don't know anything. You just know that, a piece, very good quality land. I have water. so I'm gonna figure it out how to make it. And it's interesting because people call you crazy, and until you go there and do it, and then people, oh my God, you were visionary because you were there. And I remember, and that happens over and over. People don't actually get it, but if I remember when I was back in agricultural school in Brazil some 25 years ago. If I'll tell our corn professor back then that we would be doing corn in Piauí in the northeast of Brazil and then achieving high productivity, they would call us crazy. You call me crazy? No, it's impossible to do it. And that's the same, when I went to Paraguay, people would say, no, that's impossible to do anything there. And now you go there and they're producing, 4,000 kilos of soybean per hectare, barely using any fertilizers. And it's a fantastic operation. And we found, we discovered so much interesting stuff about how to operate a farm in different conditions. And it's amazing. It is always a great joy for me specifically to go and learn different ways of doing farming. I have a question for Paul here. It was very, very interesting to know about how this whole mood thing and the small communities and villages. One thing that strikes me is after you trying, you're consolidating into this, bigger plots for your operation, you were removing the people that were sort of living off the land there, and instead of working there, getting, the villages getting paid. And that, of course, is very important because actually what you're doing, you're increasing labor productivity, which before you got there was, I guess, pretty low. And after you consolidate things, you're generating much more actually wealth. So what happened to these people that were actually working on the thousands of people that were working on the parcels of land that you consolidated? What happened to them?
Yeah, look, great question. So just for context, so from one of those villages, as I said, there were probably about 200 families. And what really happens is that all the young people either have full-time jobs or they go away to the cities to work. So most of the agriculture is done by older, retired people. And as I said, often women and men. So these are people who have either, basically they're retired. So a lot of the agriculture is done by those people, and it is in very intense periods. So basically at the end of May, out come all the harvesters, and these are the smallest little harvesters you've ever seen, and they drive around and they harvest wheat absolutely crazy for 2 weeks. And then they go and immediately plant their corn, and then everything stops. So the irrigation is still done. We have a third of our land, so 10,000 of mu is under irrigation pivots. The rest, a lot of it is still hand watered by flood irrigation out of local ditches, and we employ some of those people. So and then at the end of the corn season, it gets harvested. We come in and then we plant wheat again. So the people probably only spent 40 days a year working on the land. And so most of those people have now just retired fully. There are some of them who do some work for us. And also there are some of them who have got land somewhere else. And very interestingly, there is a lot of common ground or common land using the British law title, such as along waterways, along ditches, around villages. And those people who really want to keep farming, farm those areas. And we even have like corners of land, say where our pivots are, that are very difficult to access. Some villages in there planting, and that's why I say a mu is 666 square meters, right? So it's 10 meters by 60 meters. It's small. So they'll sneak in and plant an area that's 20 meters by 20 meters. Like we've got some guys who are growing corn in a strip that's about 5 meters wide and about half a kilometer long next to one of our farms, because it's basically landlocked. And this guy walks over a ditch or walks through a ditch to get to it. So if you really want to keep farming in China, you can find some land.
No wonder corn is so expensive right now.
So our price of corn silage, so just to give you some numbers, and these are in RMB, renminbi, and usually the average corn silage price, and that's at 33% dry matter, is about 430 tons. So 430 RMB per ton. This year it's gone up to 495. And for us, because we grow all our own silage, and we also sell about 20% of it, 25% this year, we've made a heap of money by having that land, and which has been really, really good for our investment.
Well, just so you know, in Brazil, corn prices, I'm talking the grain itself, not silage. The grain itself has doubled this year. So it's a pretty complex market right now, and we're exporting way more than anticipated, mostly to China, actually. But you brought up a point, and I think I'm very caught up on this labor productivity and capital productivity in farming. And I think that is one of the main important topics in terms of understanding and explaining what happens to agriculture. And if you look into Brazil, it is quite interesting. As a general economy, Brazil has done poorly in terms of productivity gains over the last 20, 30 years. Brazil has lagged almost every country. It's been really bad, but in agriculture and in the agribusiness sector, Brazil's productivity, being land, capital, or labor productivity in the sector, has grown significantly and has been one of the leaders in the world in that. And my like empirical observation of that is that in Brazil, what happens is that we've been able to create this very large operations, especially for the commodities, in which you have very few people working. And Brazil, the way Brazil is, all this countryside of Brazil, especially the Cerrado region, the center-west of Brazil, where you have these large properties, they have very low populational density. Therefore, you don't have people living there. So you don't have people living off the land. Therefore, you can create this massive operations and have this, huge tractors and massive operations. Therefore, you become very productive. And that has been, a key success factor for Brazil's development in agriculture in the last 20 or 30 years. And that is one of the reasons when I was asking you about China, is that if you're sensing that people are moving to the cities, it's going to open up space in the countryside for you to actually increase productivity. Because, you can, if you have lots of people living there, it becomes very complex to have, efficient and highly productive operations. So there's an interesting fact.
Yeah, look, I'd just like to dive into that a little bit more, because I'd like to share two other observations. In China, there is zero desire anywhere to be more labor efficient. And there's a major driver for that. There are 1.4 billion people, and there really is no social welfare system. So when I first moved to China, and when we were trying to sign investment agreements and locate where we were going to build the business, every department I went to had a nice old guy who was 50 or 60, who was the security guard, who you'd have to sign in, and this is even before COVID. And he would sit there with his nice little uniform on, and honestly, I don't know what the guy did. But those guys all have jobs in their 50s or 40s, late 40s, 50s and 60s until they retire at 60. Those guys get paid about 500 Australian dollars a month, but they have a job, they're not at home, they got the uniform to put on, and they go to work. So again, just like I said at the start, I went to China and went, oh my God, why do 3 people check my ticket when I'm getting on an aeroplane? Like most of us, you go to hop on your aeroplane and they scan your thing at the boarding gate, and then you walk down, and then there's somebody on the aeroplane who, the air hostesses or direct you to your seat. In China, there's 2 more people in between. There's a security guy halfway along who tears off an extra portion of your ticket, and then there's another guy who just looks at your ticket. So they have all these extra steps to keep all these people busy and give them jobs, because otherwise they're going to have them all on social welfare. So I'm 100% with you, but again, it just isn't on their radar. moving on, the biggest challenge we have found is that we don't have anybody in our local areas who can use a tractor with more than 150 horsepower. They just don't get it. They have never used something so big. So we actually hired people out of Dongbei in the northeast of China who did have experience where they do have large open areas as you would in Australia. So we could come down and start modernizing and getting some of the efficiencies that you've talked about. The other thing is all that 10,000 mu, or let's go for 600 acres, 600 hectares, it's all under irrigation pivots. That is run by 4 guys now, and they're young guys from the local community who'd all be in their early 30s. They run serious irrigation pivots, Lindsay pivots, off their mobile phone. They go around and check all the time. But what would have been done with maybe 500 people at a specific time is now being done by 4 guys. So we are able to do it, but really we've been challenged by getting the right labor skills. And one of these guys is semi-illiterate. So the younger generation who are still in the villages are not educated in the way that we would find people even in Australia or other parts of the world. So, you know, I now start looking at labour, and I do completely understand, but again, it's a different context.
So labour efficiency in Australia and labour costs and equally energy costs are expensive by any world standard. It's been a real limitation to competitiveness globally for us. And so what that has forced in Australian agribusiness development is extreme technical efficiency. You know, our technical efficiency, our ability to convert inputs into outputs is world leading. Productivity that's, you know, where all our growth in agriculture has come from, is in more efficiently converting inputs to outputs. What the downside of that has been, though, is that it has now got to the point where we have aggregated so much and we have removed so many jobs from agriculture that there is a regional economic decline in country towns, while the agriculture sector continues to grow and grow quite well. The economy surrounding agriculture, the regional economies in small towns that provide the services and the support and the backup and the hospitals and the schools and all those sorts of things, continues to decline. And you know, it's quite problematic for getting good labour into farming. Now, what's interesting right now is that the Commonwealth government, the federal government, main strategy, economic recovery strategy, is going to be regionally led. They're sort of talking about we are going to have a regionally led COVID recovery. So there's significant investments and new strategy around investing in regional processing capacity, investing in roads, infrastructure hubs, airports, things like that in regions, which is successful. And this is obviously, you know, just starting as a COVID recovery response. But if successful, potentially has huge implications on the economic factors around considering particularly agribusiness or secondary sort of processing investments in Australia.
And Richard, is for those projects, is foreign investors welcome?
So we already have significant foreign investment in large infrastructure projects in Australia. So road building, you know, and at the moment, most of it is in the cities because that's where the construction activity has been. But, you know, where I am in Sydney, for example, it's a Spanish company that's built our latest light rail development all around Sydney. So, yeah, there's been and not, I would say probably about the same proportion as Aglan, sort of around that, maybe 15 to 20% investment
But
in significant
but
national
you don't have that. You don't have that many regulations, do you? For those infrastructure.
So big government programs like that, it's a totally separate process. But yes, they're open, and it's often criticised. The procurement process from government is criticised by local developers who are looking for work, because part of the procurement process is evidence of the capacity to build at scale, huge infrastructure things, which sort of makes it more likely that they're going to select a global company rather than an Australian company who just don't have the same opportunity to do it.
It's interesting because circling back to our initial discussion, and as the same in Brazil, Brazil is dying for investments. Brazil has a very low savings rate. Therefore, we need capital inflow in Brazil. And the government is doing a massive program to attract foreign investors to any all the sectors in the economy. And yet we still have all this regulations for investment in land, which doesn't make any sense to me, because we need capital inflows, so why not welcome them in ag as well? So yeah. just to circle back to where we initiated our discussion.
But it's a good point that you were making about infrastructure. That we have a question from Marco Guimarães in the chat. And because my point is that all this infrastructure tends to increase the land value, because you have better access to the land. So I will start with Richard, then Paul and Julio. But what's your opinion about the returns on agricultural land, and is in the agricultural production? Sorry, and it worth it without considering increasing in the land value?
So it depends on the timescale that you're able to consider the investment over. We have extremely variable production climate in Australia, unless you have water, unless you have irrigation capacity. And Paul mentioned before that how important water is, and we were surprised no one had mentioned it. And I was sort of saving it for the Q&A discussion, because he is absolutely spot on in terms of where the investment trends are happening in Australia, and the interest in investing in water assets and land that can be irrigated to try and smooth out some of that variability in production that is inherent to Australian agriculture. Now, interestingly, anyone can buy irrigation assets or water entitlements in Australia. It doesn't go through the same process of the Foreign Investment Review Board as land does, and is considered to be a separate asset. So there's some time ago now, water assets were separated from land assets to try and create a fluid market, and there were no constraints put on the purchase of water assets in terms of foreign ownership. Now, it doesn't mean that there's been, so it's actually slightly less of total water assets that are owned by foreign interests than ag land. It's about 10.5% of water assets that are owned by foreign interests. So there is still a significant trade there and a significant interest in it, and most of it is because of that, trying to smooth out that variability. Now, that's not saying that if you have the capacity to think long term about your returns, that the returns aren't good. And I mentioned before that it's about 7% from production, 7% return, but that will vary. I think last year was 1.5% because of the very bad drought we've been in, up until double-figure returns. So it's just very, very variable unless you've got access to water.
Nice. Julio, could you add something about this returns in land value as Brazil or Paraguay? Because I like the point when usually big companies, they will mostly see where the land will increase the value to add that to the portfolio?
Definitely. It really depends on how we're discussing about, going to new places and new regions and starting new projects, introducing new crops, and it really depends on how much risk you want to take in doing that. If you want to start, for instance, as we did in Paraguay, returns can be quite high. Brasilagro's projects, we average roughly 20% internal rate of return on the projects, being all the money that went in, all the money that went out, bought a farm, develop it, farm it for 6-7 years, and sell it. That whole project yielded on average 21% internal rate of return in reais, in local currency. But we were pretty aggressive in developing regions. For instance, if you go to Paraguay, we bought farms there for $200 per hectare, and we were producing 4,000 kilos of soybean per hectare, and roughly no fertilizers and very low cost to produce. When you take on those risks, you can have pretty hefty returns. I would say on excess of 20%. If you go on a more traditional and cautious approach in Brazil, the compound return adding up operational plus appreciation of land, you'd get to roughly 15%. I would say that has been the case in Brazil. It depends on the region, specifically on the crop. But if we take a long-term approach, I would say 15% is a good number on that. But the most important for me is not only the return, but the characteristics of this business and the volatility and all of that. I think suited for a very specific type of investor. And I wouldn't, and that is, I've done so many road shows, talked to so many investors throughout the world on this. And what I learned is that I wouldn't sell, or I wouldn't want to have a hedge fund, aggressive hedge fund out of New York or out of Sydney, for that matter, or Sao Paulo, as an investor, a shareholder on a project like this. I'd rather have a pension fund, for instance, because we're really talking about trying to, creating a reserve of value, to create low volatility, to create something that will have a long-term value without having huge swings throughout the course of time. So it's really important, not only the return, but having the right, so to say, shareholder base or investor base on those types of projects, especially land projects.
Great, thanks, Julio. Paul, could you share us about your opinion?
Sure. There's no hedge funds or investors or pension funds or aggressive investment bankers that could ever do what we are doing and try and make money out of it. As I said, one of the main reasons for having the cropping land was to be self-sufficient in corn, to buffer ourselves against fluctuation in price. Due to the Communist Party of China, we won't get 100% increase in corn price, but just to put it in what's called a gin, which is half a kilo, the corn price here has gone from 0.8 RMB per gin last year to 1.15 RMB per gin. And this is in a controlled market. So, it has massively increased. Our wheat price is exactly the same for the last 3 years. It does not fluctuate. So, it's just a completely different set of economics. So our first reason was to be self-sufficient in corn. Our second reason was to dispose of wastewater. And the alternative was to build highly capital-intensive facilities like wastewater treatment facilities and fully treat water down to basically drinkable level to discharge into waterways. And instead of that, it was more economic from a capital-intensive perspective to crop land and to, in effect, break even. Now, the biggest challenge for us is our land cost. Our input costs and all that sort of stuff are relatively high, but they're not insurmountable. I've just done the calcs. We pay per hectare an annual rental of $2,700 per hectare. So we struggle to get out from underneath that overhead, and our corn makes a marginal profit, like about $20 a moo. So what's that? $300 a hectare, and our wheat eats up most of it. And so we overall make about $100 a hectare per year out of our land. So yeah, it's a completely different economic discussion.
Well, it's fantastic to have this totally different perspective from a country like China. So we are talking about, as everybody said, it's a really delicate topic. And Richard, I would like to start from you. How is the perception from the general public as the investment in Aglan from foreigners? As we have here in Brazil a lot of concern that foreigners will invade our country and dominate all the land area, but how the public sees this perception, how the public reacts, the general public, big cities, and etc. What's your opinion about it? And then Julio would also please add something.
Sure. Look, I guess the first thing I'd say is that most often the public discussion and the perception does not reflect reality. Australian agriculture has always been dependent on foreign investment. We've always had significant foreign investment, and many of our agricultural industries, cotton, for instance, were totally driven by foreign investment in establishing the industry and opening the industry. And since we've been collecting the data to have a very informed, factual view of the amount of foreign ownership, it's been completely stable. As I talked about earlier, it hasn't been changing. But nevertheless, just because I think of the inherent human nature around suspicion of strangers and suspicion of foreigners, it's a sensitive issue, and it's very easy to drum up a media discussion around food security. And again, the Australian agriculture exports 70% of its production. We are so far from being food insecure. It's ridiculous. We're a food secure nation. The idea that the small amount of foreign investment that we have threatens our food security, it's just not factual. So it's a difficult discussion because it is really just based on a lot of the times on xenophobia, on fear of foreigners, and I don't know how you change that over time, because it is just that unfortunate human nature that we're dealing with.
So it's interesting. And I guess you have a very good point, Richard. My experience has been talking to people that the first reaction they have is one of, I don't know, I don't feel I like it. I think it's not good. But then when you start probing and asking, but why, and explain me the reasons, the fears, when you start engaging on a discussion, people would eventually say, you know what, you're right. There is no reason why I should be afraid of this. When you have a set of, like in Brazil, you have, there's no reason to believe that a foreign investor would be evil, whereas a Brazilian investor would be a good guy. The money comes from abroad, now it's bad. And if you were a local guy, you were good. And you have a set of local legislation that you have to follow, regardless of even if you have foreign capital, you're a Brazilian company. So you got to abide the laws. So there is no changing that. So after you engage people, give me arguments without, let's step outside of this xenophobia, as you said. and really discuss, the nuts and grits of it, people eventually say, you know what, you were right. There are no reasons whatsoever for me to be afraid of this. So I guess over time, it is something that will prevail. I think there's no sense in this continuing to be such a sensitive topic. And as much as Australia, Brazil is a fantastic net exporter of food, so we're actually feeding the world. We don't need. We are way self-sufficient in pretty much everything but wheat. So it's really something that people have sort of like a primal feeling, one would say. But once we start engaging in a more, interesting discussion, asking the reasons, people would simply, agree with you that it's okay to have it.
Very much. Paul, could you share us a bit about the public opinion works and how this is shared, or if it is allowed to talk about it? Well, I think we are having some problems with Paul's connection, and so I'll go back to Richard.
Okay, can you hear me now?
Yeah, Paul, good. Yes, we are hearing you.
Okay, great. So here's the situation in China. China loves foreign direct investment. So you can go on and look at just how many billion of inbound foreign direct investment there is in China. And each area, China is basically divided into multiple jurisdictions. Obviously, it starts at China. Then the next level down is the province. So the province for us is Shandong. Then the next level down on that is what's called the city, and our city's Dezhou. And just to put it into perspective, Shandong has 100 million people, and Dezhou's got about 8 or 9. And then we are a county level beneath that, a place called Chihe. Chihe has, 1 million people, and about a quarter of those are in a city. Now, each area has a target for their own foreign direct investment, and they really don't mind what you want to invest in. They, of course, want tax-generating assets. And this is probably something I didn't share with everybody early on, but the great news for agriculture in China is that it's tax-free. So at the moment, there are not many large-scale cropping businesses or arable businesses in most of this middle part of China. And it does present an opportunity. But as I've described today, the margins are slim and the bureaucracy and the process is laborious, to say the least. So we, as our business, being a dairy farm and being a crop producer, we are only an advantage if there is processing to accompany that. So whether it's milk processing or grain wheat processing, then those businesses are taxable. So what the government does is basically balance off which foreign investments are going to yield them both targets in terms of their achievement of their foreign direct investment allocations, but secondly, in terms of their tax targets. So it's very KPI driven and very transparent in what they're trying to do.
Thanks, Paul. And the next question is from my dear Irish friend, Michael Brady, and I'll open to everybody to speak. And will be there more capital investment in land and food production as a result from the COVID? If you don't mind to start, Richard.
I think so. So I have a friend that's putting together a venture capital fund for investment in agricultural technologies in Australia. They were calling on their first raise at the time that COVID really hit and really locked down, and they were very nervous about whether the people that had expressed interest before COVID were going to follow through. They got every investor, and had much more interest. And I've heard that from a couple of other venture capital companies that I've sat in on calls with as well. There is certainly no reduced interest in investing in agriculture and ag tech and agribusiness globally. And if anything, there seems to have been an understanding that out of all the economic sectors, agriculture's been one of the least impacted globally. Sure, there's been some supply chain disruptions, and there's had to have been reorganization of supply chains and supplying different sectors, but at the end of the day, everyone still needs to eat, and the fundamental drivers to demand are still there. And I think that's been one of the realizations out of COVID, and one of the signals to continuing investment.
Well, I think the COVID has teached us many lessons. It was interesting to see how people go back to more like a primal instincts. So you have agribusiness doing quite well. Gun sales are through the roof. So people go back to more of this very basics. I do believe there will be more investments. One, because a lot of investors have seen this as an opportunity and seen how well the sector has done. Therefore, more people, if you look into the stock prices of the agricultural companies in Brazil, they're doing quite well. So people are seeing this as an opportunity for sort of diversification of investments, which is a good thing. But I guess, and there are always two sides to the same coin, right? So there will be more investments because people wanted to, see that as an opportunity, business that is doing well during the pandemic. But on the same side, on the same time, we are seeing countries everywhere creating barriers and banning exports or creating tariffs. So there is, and I guess, which is not good over time, more barriers for world trade, which is not a good thing. Eventually will change, but I guess in the short term there will be more money into the sector, but at the same time we're going to have more barriers for trade. So we've seen at the peak of the pandemic, several countries would ban exports of any type of agricultural product as a reaction or a fear of not feeding their own population. It didn't happen to Brazil or Australia because we have such a great surplus that is actually not necessary, but several countries did so. And I think that is bad for world trade and it is bad for the sector, but it happens and there's not much we can do. But I do believe will be more investment because people see as an interesting opportunity. And also, I guess the whole value chain will have for a while to invest more in inventory and capacity to cope with this volatility. So as you have, we've gone through several years of very moderate prices, low volatility. And once you go through that in general, right? I'm not talking about very specifics or specific products that may have experienced a different scenario, but overall. So when you go through several years of that, people streamline the value chains a lot, make it very thin and very just in time and everything very precise. And you have something such impactful as this, everything goes haywire. So now people will start rebuilding inventory. We can see what is happening in China right now. So rebuilding inventories and invest in infrastructure so you can have a better way to cope with this volatility. So there's a lot of investment in the short term, but I have to watch out for all those trade barriers, which I think are pretty good or pretty bad for our sector in the medium and long run.
Paul, could you talk a little bit about? Sure.
3 points. The first one is, irrespective of COVID, people have still got to eat. So yes, agriculture is still going to be an attractive sector to invest in. Secondly, I agree wholeheartedly with the last point that for countries like Brazil or Australia, we have such a surplus and we will continue to export. However, what has become really, really, really apparent is that countries are focusing on self-sufficiency, and it's not just self-sufficiency in food, it's self-sufficiency in everything. So here in Australia, there has been a real push towards re-onshoring of certain types of manufacturing. Particularly, it started with PPE, personal protective equipment, where suddenly we didn't have enough all these things because they were brought in from offshore. And therefore, there has been a bit of an attraction back into those sectors. So I can see not just Australia, but many countries wanting to do that. And within that same context, China has also come out and said that they're striving to be self-sufficient in food. And then ultimately, the third point is I read a really good article in the US, and that is that investment flows to the place where there are the least barriers and the best returns. And ultimately, nobody's going to be investing in airlines or cruise ships for the next 5 years. So, you know, agriculture is a sound investment.
Great. Thanks, Paul. We have one last question, and probably we will start from the closing. The question is from Eduardo Severo to all the panelists. And it's, how do you see investments in farmland in Brazil by foreign investors? Julio, I think we should start with you. And I know that's a broad topic, but
I think it is changing dramatically. I think when we started the company almost 15 years ago, it was a brand new asset class. People were not familiar with it. No water companies out there, so very few people, investors, would know about it. And it's been a long time already, so people are getting knowledgeable about it. A few months ago, there's a new fund in Brazil that has just been listed, devoted just to buy farmland in Brazil, and it's been they did a great job, and a lot of individual investors putting money into it. So I like it. I think Brazil, when you look into Brazil, it is probably the only sector in the Brazil's economy that has been doing consistently well in the last 20 years. As I've mentioned before here, if you look into productivity gains in the agricultural sector in Brazil, are just tremendous, outpacing any other country in the world and outpacing the rest of Brazil's economy by far. And therefore, everybody's paying attention to it. And a little bit different than what's happening in Australia, the ecosystem around the agri sector has been growing a lot as well. So we go into the medium sized cities in the countryside of Brazil, they're booming. So there's a lot of things going on, a lot of technology happening. So I think it is becoming more popular as an investment thesis for the average person. So I'm quite optimistic about it. I think we're going to have more companies that will IPO on this, and have more opportunities for investments, have new funds, a lot of smart people moving into the sector. So I'm quite optimistic. I think what we've accomplished in Brazil in the last 20 years have created a good momentum for the sector, both in terms of people, technology, money, investors. It is changing a lot. I'm quite excited about it.
So, Richard, what's your opinion?
Look, I don't know that I can give a hugely informed opinion on the opportunities in Brazil. But I guess what I would say, just from an Australian perspective, is that apart from people like Paul and innovators like Paul and a few others, we're generally not nearly as good at being outwardly focused and looking at global opportunities as we are at bringing them into Australia. And there's quite an effort now to be more outward thinking, particularly around things like our ag tech capability and our R&D, and thinking about our agricultural knowledge as an exportable product. We don't do that particularly well, I don't think, in terms, we tend just to look at the domestic market in the way that we think about the possibilities there. And we need to be better at realizing global opportunities. So hopefully that extends a bit more and we see a bit more activity in that space, and you start to see a few more Australians in Brazil promoting what we can do.
Thanks, Richard. And
Richard, just a curiosity. I sold a farm to an Australian investor in Brazil, just so you know.
Well done.
A very large one and a very good farm.
Okay.
Very smart people.
so, what is your opinion? Would you like to move from China to Brazil for a while?
You never know. So I obviously can't comment at all about Brazil. Unfortunately, I've never even been to Brazil, but I'll share it from a Chinese perspective. One of the most, all of us should be aware of what the Chinese Belt and Road Initiative is. That is basically China's trade links throughout the world. And China will continue, whether it is Chinese-owned companies or Chinese government-owned companies, will continue to acquire and invest in land throughout the world, mostly for food security. So as Richard mentioned earlier today, Chinese own approximately 2.4% of Australian agricultural land in terms of area, not in terms of necessarily productivity. I'm sure that they own parts of Brazil. They will own parts of many, many different countries. And unlike what Richard just spoke about, and to be fair, what the Brazilians and even the New Zealanders try and do is take their farming systems or their IP or their knowledge. Chinese don't work like that. Chinese just turn up with a pot of cash and want stuff. They don't want to turn up and tell somebody in Australia how to farm. They don't want to turn up and tell anybody in Brazil how to farm. They just want to go, right, we need this many soybeans and we want them to come every year and this is the price. See you in 5 years. Make sure they're delivered. Goodbye. So it's a very different type of investment model from China, but it is, they again have targets of outbound investment. So, you know, watch this space. You all should spend 20 minutes looking up Chinese Belt and Road Initiative, understand how it affects you and your country. It's going to be as big as Deng Xiaoping's opening up 40 years ago.
Well, thank you very much, Paul. And closing this question, I would like to give a few moments to each of the panelists to just close and give one of the last opinions. But also, and first, thank you, the Council of the Australian and Latin American Relations, the COALAR, who made this webinar possible, and also the Brazilian Rural Society and Nuffield. So thank you very much for being here with us. So Richard, if you could close, Julio and Paul.
Look, thank you, Ollavo, for hosting, and thank you for the opportunity to speak. It's been a really interesting discussion. Like Paul, I also haven't yet been to Brazil, which is something I really need to rectify as soon as I can. You know, I think, I guess I just wrap up by repeating my comments from earlier that global capital flow in agriculture is incredibly important. It's always been, you know, a misunderstood and underrated sort of part of agricultural development in Australia, and anything that we can do to remove barriers and, you know, continue that flow and facilitate investment, I think has to be good for the future of agriculture in Australia.
I totally agree with Richard. I think the free flow of ideas, capital, people is fundamental for the continued development of agriculture, be in Brazil, Australia, China. The idea of us having not access to capital or people or ideas is ludicrous. It won't take us very far. So I think we should really, in Brazil, embrace all those ideas. I'll give you one example. that I don't know if many people are familiar with. But Brazil is one of the largest sugarcane producers in the world, and it's pretty much mechanized already, all the harvesting. And the main sugarcane harvester that we use in Brazil is made by John Deere, and it was developed in Australia, and it continues to be developed in Australia. So, so it's two things that I wouldn't have thought were connected actually are pretty well connected. So I think it's to be sitting here isolated from the world, just selling stuff to the world is not the way to go. Definitely, we should integrate more and be part of this global network of capital, people, idea. This is we shouldn't go back to the way Brazil were, 34 years ago, because clearly it was wrong given what we've accomplished so far.
Look, I would like to thank everybody, the other presenters. I've learned a hell of a lot in this discussion. It's been very valuable for me, so I really appreciate being invited along. I've got to go away now and do some serious thinking about a lot of things. So thank you to the other presenters, and thank you to the questions. These sorts of things do stimulate great ideas. Look, I'm always welcome. Welcome any questions. And again, thank you for the invitation.
Well, thank you very much again. Just a special thanks to Sally Thompson and Arthur Kuhn that helped me to organize this webinar. So good evening, Richard. Good day. Good morning, Richard, and good morning, Paul. Have a great day of work. Julio, good night, and good night to everybody else. See you later. Bye-bye.